Well, Uber said today that it plans to invest $150 million in a Canadian engineering hub and additional investments in its self-driving car unit here, Advanced Technologies Group. I had a chance to sit down with the CEO, Dara Khosrowshahi, and asked what has to happen before that IPO that is expected next year.
Yes, we are. 2019 is our target, the second half of 2019. We brought on a CFO, Nelson Chai, so it's important to have that spot filled. And at this point, it's all systems go.
What do you need to do? What do you need to show the street pre-IPO? Is it profit? Is it near profit?
I think we have to show a path to profitability. When you look at our business, there are many different segments. There's a ride segment, which is the most mature segment. And I think we'll be able to demonstrate within the rides business a path to profitability, continuing to increase our contribution margin. And then there are segments like Eats that are about hyper growth. You know, Uber Eats is one of the fastest growing parts of our business, the largest food delivery player globally outside of China. And really that's about market expansion. And then we've got some very new parts of our business. If you look at the bikes business, the e-bikes, jump bikes, and scooters part of our business, or flying taxis, et cetera, these businesses are not going to be profitable for a long time, but hold incredible growth promise. And what we see in the marketplace is the market pays for growth.
And you are investing heavily in the new businesses you already have, and also new businesses to come. How much more expansion is there for you?
Well, when you look at the transportation ecosystem, ultimately what we're going after is debundling car ownership, right? I mean, the car is an incredible vehicle. People use it to go to school, to go to work, to get groceries, et cetera. And now in urban environments, we think that we can build out a host of services that essentially replace all of these various use cases of the car. This is ultimately a $6 trillion industry that we're going after. A lot of people talk about Uber being a big company, but we account for less than 1% of miles driven on the road. So our eyes are big, the target is big, and yes, it will take investment, but we think that we can also demonstrate progress in terms of profitability as we continue to make the investments in all these technologies, including self-driving.
Part of your existing model, it does deal with human drivers.
Very much so. Human drivers are a huge part of our business.
There is this growing push to force you to treat them less as contractors and more as employees. Does that upend your model if you have to treat them like employees?
Well, I think that the fact is that when I talk to our driver partners, I'm actually going to have a forum with our driver partners here in Toronto. The number one reason why they like Uber is that they can use our platform however they want to. You know, they can come on for 2 hours, get off some, if they want to. I had a driver who liked driving around with her daughter, but you can't do that at Uber, but she now does that with Eats because her daughter can go and kind of deliver the food and they get to spend time together. So we think that looks and feels like an independent contractor. So we think we're on the right side here, but obviously we've got to have discussions with local regulators, laws, et cetera. But ultimately we're building this service so that it's a service to be used by our driver partners any way that they want to, whether they want to do it full-time, part-time, or some way in between.
The regulator risk is a big one. We just saw New York take action on minimum wage, capping licenses. As you expand into other types of mobility, is that a big risk that the regulator could change your business overnight?
I think regulation is going to be a factor in this business going forward in all parts of the business. The fact is that we're different from a lot of other technology companies in that we connect to the real world, right? You push a button and a car shows up. You push a button and you get your Big Mac within 30 minutes. So I think that comes with a relationship with the cities in which we operate and regulators that's more fundamental. We've been working with regulators for years and years, and in general, if I were to characterize the regulatory schema, overall globally it's getting better. But we're going to have bumps on the road everywhere. New York City came to a regulatory conclusion that we don't agree with. But it is an issue. This issue of congestion is an issue that every single city is going to face. And we're actually looking to solve congestion through products such as e-bikes or scooters, so that if you come to Uber, you can essentially think of Uber as a mobility platform, and we can actually encourage you to take, if you're an individual and you're going 4 kilometers, you shouldn't take a car to where you're going. Maybe you should take a bike, or you should take a scooter, or use the underground.
You are also doubling down on driverless technology with this investment here in Canada.
Yeah.
Why is that so important? Why does Uber need to own that technology rather than just use it to your advantage at some point?
I think we need to use it to our advantage. We don't necessarily need to own it, but in the early stages of developing this technology, we think there's a real advantage to developing it with, in conjunction with a rides network, because we can actually develop the technology specifically for riding. It's not replacing the driver in every single circumstance. It's for a ride-sharing framework. And so in the early days, we're certainly going to develop in-house, but we'll look to partner. So for example, we announced a partnership with Toyota where they invested $500 million in our company, and we are now working on co-developing a purpose-built ride-sharing car, an electric car, that we're developing together going forward.
That comes with risks. We've seen some blips, safety issues, accidents.
Yes.
That associated with your brand. Is that a problem for you?
I think that this technology, because it works in the real world, absolutely comes with risk. And we are now undergoing a top-to-bottom audit of our practices, how we develop, how we test, how we simulate, how we test in a track, and ultimately how we test in the road to make sure that we are as safe as possible while developing this incredibly interesting technology. You've
been in the job about a year.
Yes, a little over a year now.
A little over a year,
yeah.
And charged really with turning things around. Do you hope at some point that we stop calling it, the troubled Uber, the controversial Uber? At what point do you put the past behind you?
I think we're at that point. I think that the fact is that the management here who built this company, who founded this company, certainly made their mistakes, but they built a great company. And I get to take that to the next stage. And that requires change, and it can be tough sometimes. But we're in a position now where we have made safety the top priority for the company, where we are now very close to an initial public offering, which is just an event, but an important event within the company, where our governance has changed. We have a new chairman to lead the board, et cetera. And I think all of the factors are in place, including an incredibly passionate workforce to succeed, but not just succeed as a company, but succeed as global citizens, succeed as a citizen of the cities and someone who works with regulators in a constructive way. So, we've had our issues, we take them seriously, we've stood up to them, but at the same time, I have a lot to work with here, and I think we're at a pretty good point as a company.
Is it over? There are some signs there's still some internal cultural issues happening, ongoing. Your HR chief has quit, there are allegations still of things internally. How long before that's really behind you?
I think the culture work never ends. One of the first things that we did was we set a set of new cultural norms. One of the most important is always do the right thing. But the work of making sure that those translate from words to actually action is never done. Making sure that everyone at the company lives those words and takes them in. So when you got a company that has more than 18,000 employees globally, things are always going to go wrong, but hopefully they'll go more right than wrong. And I think we're on the right path as a company now, and I think we're going to have more good days ahead of us than bad days.
You mentioned the Toyota investment. That's one that put your valuation north of $70 billion. We talk about an IPO that may be $100 billion. How daunting are those figures to you in terms of what you're going to show the street and investors when the time comes?
Lots of zeros there. I try not to get too caught up in valuations. What I've got to work on is making sure that we attract the best engineers, best product folks to build out terrific technology. Really, it's the talent of the company and the strategy of the company, and the valuation will take care of itself. Some say that's why I brought Nelson as the CFO. He's going to be focused more on that, and I'm going to be focused on building great products and building great products in the right way.
Are you in any danger of trying to do too much?
We are in danger of doing too much every day. It's a real challenge. And listen, it's an opportunity. This is a $6 trillion market that we're going after. And if there's one thing that describes Uber is ambition, and ambition to make the world a better place. And we see lots of opportunities. So we do have to narrow our scope at times And sometimes we have to leave incredible opportunities aside because there are even better opportunities for us going forward. So there's a lot to do with this company. Are we up for it right now? I think so. But the push to focus is an important push for any company.